Hey, what's up, my friend? So in today's episode, right, we want to discuss how to start Forex trading with $100. I know many of you don't have huge trading account. Maybe $100 is all you have. So
Rayner, how do we start trading with $100? So,
a few things to share with you. Number one, manage your expectations. I'm here to tell you that you are not going to take that $100 to turn it into $100,000 or $1 million. You are dreaming, right, if you are thinking along those lines. And if anyone out there promises you that it's possible, two things. Number one, they're either a scammer, or number two, they're just a minority, very few, lucky few that manage to pull it off. Right? 99.9999% is going to fail trying to do that. Okay, so that's the first thing to bear in mind. Manage your expectations. You're not going to take that $100 and turn it into a huge sum of money anytime soon. Number two, with a small account size, your risk management still applies. Because think about this. With a $100 account, right? Many of you are thinking,
Rayner, it's only $100, right? Just, like 20 cups of coffee. I can afford that, right? I can afford to lose that $100.
But here's the thing. As you grow as a trader, as you have more capital and you put in more money, like now let's say you have a $1,000 trading account or a $10,000 trading account. Guess what? If you do not master risk management at the start, you will likely lose those trading account as well, regardless of the size you're trading, whether it's $500 or $10,000 account. So risk management still applies. You must master risk management despite, right, your account being, a small size. Okay, and which brings me to my third point, right? Some of you might be thinking,
But Rayner, with the risk management, right, with a $100 trading account, risk management is difficult to apply, man. Are you kidding me?
so I get it, right? Yeah, you have a $100 account, and let's say you go with the traditional or the typical 2%, stop loss rule. So this means that if a trade goes against you, you can only lose $2 out of your $100 trading account, and that sounds, quite weird. Man, $2, that's quite little, man. And I agree. And this is why it brings me to my third point, is that you must find a broker that offers you nano lots. Right? So let me just, clarify what is nano lot. So as you know, in the Forex market, one standard lot is 100,000 units. One mini lot is 10,000 units. One micro lot is 1,000 units. And a nano lot is anything below 1,000 units. It could be 100 units. So if you can, trade nano lots, or you can trade in terms of 100 units, this means that one pip, right, is worth only 1 cent to you. And if you have a 100 pip stop loss and you're trading only 100 units, that means, right, the potential loss on that trade is $1. So can you see how useful nano lots can be? Yes, you're not going to make a ton of money. You're probably going to make quite little money, insignificant money, but it teaches you how to respect your risk. And learning how to respect the markets, learning how to apply proper risk management is something that will pay you dividends, right, for the rest of your trading career. Because it applies whether you're trading $10,000 account, 100,000, a million, risk management still applies. So if you can master this by using, nano lots, you are pretty much, I would say, having a smoother, right, journey ahead. Okay, so that's the third thing to share with you. Get a broker that offers you nano lots. And finally, number 4, with a $100 trading account, it is very unlikely, right, that value will stay for the rest of your trading career. And you shouldn't be, looking to grow that $100 trading account. Yes, you should, look to trade it, respect the markets, apply proper risk management, but you should have the angle of, adding more funds to the account so you can trade larger sums of money. And when you can trade larger sums of money, you can make more money in terms of notional value. Let's put it this way. $100 account, you make 10% is $10. If you can, let's say, put in money to the point where the account is $10,000, you make 10% now, it's $1,000. Can you see where I'm coming from? Same risk management applies. The only difference is the notional value that you're trading from. So don't look at the $100 as, as a end all be all. Look at it as a stepping stone, right, to grow it into something larger, because that's how you make the big money trading the markets. And one last thing, right, is that, some of you might have brokers that, you're comfortable with, and they don't have nano lots. So Rayner, what now? So a quick tip to share with you is, if your broker doesn't offer you nano lots, and you still want to stick to your broker, and you still want to respect, risk in the markets, then the only thing that I can think of is that you want to change the time frame that you're trading on. So let's say, for example, if you're trading euro dollar on a daily time frame, I would say as of right now, a reasonable stop loss on the daily time frame is anywhere between 150 pips, 200 pips, and it's pretty large. Okay, and if your broker only offers you to trade the as small as a micro lot, that's a potential $20 stop loss for 200 pips stop loss using a micro lot. So what you can do is you can go down to a lower time frame, maybe euro dollar on a 4-hour time frame. On that time frame, maybe you can have a 50 pip stop loss. That is reasonable. That could be reasonable on the 4-hour time frame. And if it's just a micro lot, 50 pips multiplied by 10 cents, that's about a potential, I would say, $5 risk on the trade. So again, depending on your account size, $5 might be something that you are comfortable, right, taking taking the trade, right? Because that is still within your risk management parameter. So that's another final tip to share with you. If your broker doesn't offer you nano lots, then really the last thing that you can still do is to trade off a lower time frame, because on that time frame, right, your stop losses tends to be smaller compared to the higher time frame. So as a quick recap, number one, manage your expectations when you are trading a $100 trading account. Number two, risk management still applies. Number three, get a broker that offers you nano lots. Number four, get your feet wet, right, and look to scale up your trading account over time. And number five, if really can't find a broker that offers you nano lot, then really the last thing you can do is to trade a lower time frame where the stop loss, right, tends to be smaller. So with that said, I wish you good luck, good trading. I will talk to you soon.